Welcome back. Well, the markets have taken out the 22,600 odd mark. So that bit of a bounce that we saw, that quickly got sold into. The Nifty Bank, though, that's holding one end up with a gain of around 250 points. Positioning is very, very light over there, as we were telling you earlier. Rollovers are much lower than what we've seen in the past. So that one's a lighter index for the time being. It's doing a bit of an outperformance. But Tata Steel, that's one of the top losers on the Nifty, in fact. But the numbers look pretty okay. We have Rahul Jain, who joins us on the show. Hi, Rahul. Good morning and good to see you. Well, the stock is pulling back closer around 4%, Rahul. What did the street like about the numbers? Or do you think it's market sentiment that's swaying? Because that's not the only steel stock that's down. The other ferrous names as well have come in for some profit taking. Your take?
Yeah. Hi, Nigel. The numbers were pretty slightly weakish, I would say, because largely due to pricing. So steel prices on a year-on-year basis for Tata Steel is lower by about 8%. And QOQ is about by 4%. So that is actually dragging the numbers lower. Volume, they've done fine. They have shown some growth. Obviously, the next kicker will come from when the new 5 million ton expansion that they're doing. And on the cost side, also things were pretty all right. So if you see, despite weaker pricing, they've managed to hold on to the EBITDA. The EBITDA per ton is only slightly weaker. So in that sense, the numbers are not that bad, obviously, but pricing is the key element. And we have seen prices go up in the recent quarter. In the Q1, we can see a significant, or almost about, companies have been talking about 5 to 10% kind of a steel price increase, and costs are kind of benign. So the outlook in going forward is much better.
I'll be speaking to the management in a couple of hours from now, or maybe 90 minutes from now. And if that 5% price increase comes about, I don't know whether demand's strong enough, but that'll be music to the ears of the bulls. But you mentioned that the numbers are a little lower than your expectations. We go through a lot of brokerages with regard to the India EBITDA per ton and the Europe EBITDA per ton. And in comparison to that, actually the numbers for India was more or less in line at 15,000 rupees per ton. And on Europe was much better. What were your expectations?
Yeah, Europe, actually, they have managed to cut down the losses. Over there, things are slightly better. India, obviously, because if you go by what the numbers other companies have reported, they have done slightly weakish in the sense the pricing hasn't been that robust. So that I think that taken care of by how market moves from here. So I think the key commentary here is when are they going to commission the 5 million ton? They've done a lot of capex. So how that shapes up here.
So you're not going to be a buyer into this dip on Tata Steel, right?
Yeah, I think their growth profile for some of the other companies is a lot better, largely because of the base level, especially, for example, if you see Jindal Steel and Power, their capacity expansion is almost doubling from here, So the profile is very different. Tata Steel, certainly good. They have their issues in terms of, getting the UK operations on stream and reducing the losses in the international operations. Debt level continues to remain a bit on the higher side, about more than 75,000 crores. So Tata Steel has a lot to work on the balance sheet as well as the international operations. So those are the slight issues which I see over here.
All right. And JSPL, they've got a couple of triggers for them as well, right? Capacity is going to be increasing. They're getting some coal from their captive sources as well. And that political uncertainty for the time being seems to have been put to rest. And that explains why that stock has moved up. A quick word on the non-ferrous space. A couple of calls you have got bang on with regard to Vedanta as well as Nalco. I think you were quite bullish on both those two names. Both those two have seen some bit of a pullback, particularly Vedanta from the recent peak.
Right.
Any view on that name?
So Vedanta, especially the one is that they are going to announce a breakup. The details are yet to come out, and non-ferrous prices have been very robust. So if you see across the board, the key metals for them, aluminium and as well as zinc, both are more than 5 to 10% in the last quarter. So that is a very strong driver, and also if you see the change in earnings is far massive, because what happens is they also have coal, captive coal coming in. They have the bauxite integration is going up. So things are improving very significantly over there. And obviously they were trying to raise some money so that they can lessen the debt burden much faster. So that the balance sheet changes very fast, and commodity price drive also is quite strong. So they have two massive tailwinds coming in their way, which can really alter. So if you even look at the value today, it's about 450, whatever order the stock is trading at. Hindustan Zinc holding itself is at a similar price. So in a sense, they're getting all the other businesses at kind of a very discounted price. So with over time will get discovered. I think they've had issues in the past. So as things get resolved, we can see a significant uptick from here as well.
Just wanted to get your sense on, from here on, what would be perhaps one or two of the best metal stocks to play? Because if we just look back at historical trends, some of the PSU metal names have done very well because they have the added tailwind of, the PSU buzz. So SAIL, for instance, has given double the returns of Tata Steel in the last 1 year. And then this underlying sort of, trend on aluminum, which has been very, very bullish, that's really helped NALCO, along with the fact that it's a PSU. So going forward from here, what would you bet on, ferrous or non-ferrous?
So the characteristics of ferrous is actually a lot better because you have costs which are going to come down. Especially see ferrous, see for example, Hindustan Zinc is a cost leader, right? They're more than 50% EBITDA margins, so really can't do very dramatically over there. But for aluminum players, the swing can be quite significant. The costs don't go up. For example, in steel, the slight issue is that whenever you see steel price going up a lot, you see coking coal, prices also start moving higher. So the bargaining power is much lesser in that extent. Whereas in case of aluminum, the most of the coal is sourced domestically, or even if it is imported, the costs don't move, in line with the end commodity price. So you end up keeping most of the margins. So that is a positive trade we have over there. And in case of non-ferrous, the drivers are also similar, but non-ferrous in case more so for EV replacement and for climate change transition. Those things are and aluminum has come as standout metal, especially after COVID, due to the very high the recycling capability it has. So that has done well. The underlying drivers obviously remain very similar. Transportation and construction is more than about 50-70% of the demand. So that those remain the same for steel as well as non-ferrous. But non-ferrous metal companies in India are definitely slightly better placed compared to the steel producers. Obviously, steel individually stock specific, like I said, for example, you mentioned about PSUs. So in case of PSUs, the lot of inefficiency is there. For example, if you see the EBITDA per ton for SAIL, it is far lower compared to JSW or Tata Steel. So even if there's some small improvement which they're able to work through, that makes a huge difference. And see, on terms of the physical assets, SAIL is unbeatable. They have 5 locations. They have full captive iron ore, but obviously they have not been able to ramp up the production in the same manner. They've taken far longer to increase the capacity. Now they're talking big numbers, but the faith of the market is less in terms of the timelines, obviously, because they have not been as efficient in terms of adding capacity. But those things can change. Obviously there is as you have better management drive, more accountability, things can look better. So PSUs are definitely, they have very positive characteristics. For example, in case of even NALCO, they are the only ones which have, adding alumina capacity. So those things are definitely there. Yeah.
Okay, thanks a lot for that. Thanks for taking the time out.